Once again, good evening, everyone, and thank you very much for joining into today's webinar. Our topic for today is making sense of the current market. My name is Jyotak Nandwana, and I'll be hosting today's webinar for you. So before we begin, I would like you guys to spend some time on going through the disclaimer. So basically, it says that stocks that we'll be discussing today shouldn't be considered as a recommendation. All information is intended for educational purpose and in no way should be considered as investment advice. All right, so this is going to be our agenda for today. As you must have made out by the topic, we are mostly going to discuss about the current market scenario. It was quite an interesting day in the markets today. As you all must have seen, we had a really volatile day in the markets, and that's the reason why we thought, in fact, last couple of weeks have seen interesting action in the market. So that's the reason why we thought that it would be ideal to discuss about the Indian market condition. One interesting point that we would like to highlight over here is the divergence that we have been seeing in the Indian market, and we'll be talking in detail about that today. There are a couple of interesting facts as well that we'll bring to your notice, and we'll end the webinar with talking about what's the ideal approach that investors should be taking right now, and what should be their stance right now, whether they should be aggressive or they should be cautious in their dealings. Towards the end of the webinar, there is going to be a dedicated Q&A session. So all your stock queries, market direction queries will be answered at that time. In case if you have any query which is relevant to the current slide, you can always use the chat box to ask that query, but we'll answer all other queries towards the end just to make sure that the flow of the webinar is being maintained. So there's one query which popped in right now asking whether the recording of the webinar will be available. Yes, we have all our recordings of the webinar on our blog as well as our YouTube channel. So all our past webinar recordings have been uploaded over there. Right, so today was quite a volatile day in the markets. It began well and it was an eventful day with the market opening, gapping up. In fact, Nifty had gapped up, and it was mainly because the market kind of expected that BJP will end up as being the single majority party in Karnataka. However, that was something that didn't happen, and with all games, political games now being played, and we are not even sure as to who will end up ruling Karnataka for next 5 years. So that is something which is uncertain right now, and that's the reason why markets sold off quite a bit. And I think after making a gain of 1.1%, the markets kind of closed flat and with a very small loss today. So that was kind of a stalling day. The volumes were high, and we call it a stalling day when the market fails to progress. It closes near the day's low, so that's a weak action. And since the market moved into an uptrend, so we had a follow-through day on April 5, and so I'll quickly annotate on the chart here. So we had a follow-through day over here, and we had a very good rally that we had seen, and there were a couple of distribution days, of course, in between, and a couple of stalling days as well. Which again I would like to repeat. A stalling day happens when a market does not make much progress. Even after making some good intraday gains, all those gains are wiped off, and it closes near the day's low, and the volumes are higher than the previous day. It's a weak action, and it could be a sign that institutions are reducing their exposure in the market. So we have had 2 distribution days and 2 stalling days in the past 25 sessions. So that is something which is kind of looking weak. However, on the other hand, we also see that the index is still trading above its 50-day and 200-day lines, and the overhead supply. So basically how much the index have corrected from the 52-week high, that remains quite manageable. So it's at a comfortable level of 3 to 4%. So not that great. And So if you look at the overhead supply, it's not that bad, and that's the reason why we continue to track the Indian market in a confirmed trend. The key indices remain in a confirmed uptrend. Q4 earnings till now have been quite supportive for the market. We have seen some really good results from many of the large cap companies, so that has kind of held up the market. On the other hand, we have also seen foreign institutional investors reducing their exposure in the market, and that is an interesting fact that I would like to highlight in the later part of the webinar. So that was Nifty's and Sensex recap. Again, it is in a confirm uptrend for now. However, couple of weaknesses can be seen in the form of 2 distribution days and 2 stalling days, and we'll consider changing the market status if we see more weakness building up in those indices. Now, before we move on, I would like to also highlight is there are a couple of sectors that have seen good accumulation going on. So consumption is one. So consumption-oriented companies have done pretty well in this results season, and some of that could be mainly because of there's a lower base. So a couple of quarters were affected because of demonetization in the previous fiscal, previous to previous fiscal, and that's the base that we are talking about, and that's the reason why some of the consumption companies have been able to report better results. So there's a query related to distribution day. What's a distribution day? So distribution day is a sign of institutional selling. We, in our market direction model, we keep a track on institutional selling by looking at the number of distribution days that have occurred in the past 25 trading sessions. So basically what happens is whenever a key index, it drops more than 0.2%, and it drops 0.2% or more than that, and the volume is greater than the previous session. So in the chart, if you will be able to make out, I'll quickly highlight. So you can see that here the index has dropped more than 0.2%, and of course the volume was greater than the previous session. So that's the distribution day. So we keep a track on this because we want to make sure that whenever the market is showing signs of weakening, we are able to see it in the form of distribution days and quickly change our market status from confirmed uptrend to uptrend under pressure. So you can have a look at what the Indian market is currently doing, what is its current market condition on the home screen of our product, that is MarketSmith India. Will in the Q&A session, of course, I'll be taking you, I'll be discussing few stocks if there are few stock queries that are asked, and I'll be showing it on the product at that time. So a couple of sectors that have done well is consumption related stocks, and of course the IT sector has been doing really well over the past 3-4 months. So these are a couple of pockets that have been doing well for the market and are supporting the uptrend in the market. Right. So next we move on to the mid cap index. Now this is what we were talking about earlier. So there is divergence in the market. Not everything is looking rosy right now. So the mid cap index has been feeling the heat over the past couple of weeks. We have seen 4 distribution days build up over here. So there has been sign of high volume selling. And you can make a note of this by looking at the volume. So you can see how the down days have come on higher volumes than the up days, and that is a sign of institutional selling. So it has also breached its 50-day line, which is another important signal that showcases that the index is looking weak. And on a daily chart pattern, you'll notice that how the index has been making lower highs and lower lows, and that is of course a bearish signal. Now, one important point that I would like to highlight over here is the number of breakouts that we have seen. So whenever the markets are doing well, so once the follow-through day had occurred, which came on April 5th, we saw a lot of stocks breaking out of base patterns following that follow-through day. And we had seen a lot of breakouts as well, good quality stocks that were coming out of good chart patterns. So, however, that number has dried up right now. We don't see a lot of stocks that are breaking out, and that has mainly to do with the weakness that is being displayed by the mid cap index. So, If we go by our market direction model, the mid cap index market condition according to that would be uptrend under pressure, and that's the reason why I had mentioned that the market is showing divergence right now. Now, if we talk about another benchmark, which is the Nifty small cap index, of course, you'll see a similar chart over here. So this has been more weaker than the mid cap. The main reason for that is we have had 6 distribution days in the past 25 sessions. Again, the index breached its 50-day line on May 10th. So now both the mid cap and small cap indices are below their 200 days. So this is the 200 day and the red line is the 50 days. So are below, both the mid cap and small cap indices are below their 50-day and 200-day moving average. Okay, so what April 5 signifies? So April 5 was a follow-through day, and by follow-through day, I mean is a change in market trend. So from a downtrend, we wait for the market to establish a bottom for at least 3 days, and then we move the market to a rally attempt status. And whenever a follow-through day occurs, so in technical terms, it is an up day where the index has moved at least 1.5% higher and the volume is greater than the previous day. So a couple of conditions: index moving up by 1.5% at least and the volume is greater than the previous day. So when that happens, we change the market status from rally attempt to a confirm uptrend. So April 5 was that day, and after that we had seen quite a few stocks that broke out of chart patterns. Now coming back to the small cap index, so as I was saying, it is below its 50-day and 200-day line, and today's action was even weaker. So this chart is as of yesterday, and if you incorporate today's action as well, so we have a 1% more decline both on mid cap and on small cap index. In fact, so again, breakouts have become rare, and the small cap index currently, if you go by our market direction model, it's in a downtrend. So this is the divergence that I was talking about: mid cap in an uptrend under pressure, small cap in a downtrend, and the key indexes are still in a confirmed uptrend. So it's a bit of a tricky situation. We have had a similar situation in January as well, when mid cap and small cap had in fact given early signs of weakness, while the large cap followed it later. So if we have to go by that, we'll have to be a bit cautious, and in fact that is something which I would like to highlight right now, is that investors should be really cautious with respect to making fresh position. Of course, if they see a stock that has exceptional fundamentals and is displaying exceptional technical strength, that is a rarity, and they might consider adding that to their portfolio. But apart from that, it's always better to stay on the sidelines when market, especially mid cap and small cap indices, are acting really weak. All right, so talking about breakouts, so this is something which we regularly post. I think on a weekly basis we do post, try to post this on our social media channels. So the number of breakouts, if you just look at it, you'll get a very good idea as to how the market has been doing. Now notice the rise in the number of breakouts here. You can see that we had a follow-through day in this week, and from here on we had a lot of stocks that were breaking out, and you can see on a weekly basis we had over 30 stocks that broke out, and suddenly this number dried up in the week ending May 4th and on the week ending May 11th. So this was quite a signal as to not everything is well in the market. Of course, investors, they chose to be a little cautious ahead of the state election results. A BJP win was something which could have boosted market sentiment, but now since that has not happened and there's no clear majority for BJP, the market could be a little volatile until and unless if something if a miracle could happen from here and BJP kind of comes back into power in Karnataka. Okay, so if small cap and mid cap is down, that means large cap up move is more. Then of course, so there are different constituents, and it's mainly to do with the market cap and small cap and mid cap. In historically, what we have noticed is small cap and mid cap have led a rally. So I think in 2016, when the market was doing really badly, it was the strength in mid cap and small cap indices which showcased that the market is reversing its trend. On the downside, we had seen in last January, that is January 2008, so the most recent correction we had seen, mid cap and small cap indices had weakened much earlier than the distribution days occurred in the frontline indices. So going by that, of course, you need to be a bit cautious, and that's the reason why we are telling you, because we also, from a perspective of the price action in leading stocks, the number of stocks that are breaking out of chart patterns, we have seen a complete dry up over there. You can see how the number has come down over the past 2 weeks. So that makes us a bit cautious right now. But then again, it's just a matter of sentiment, and in the short term, it's always the sentiment that dominates the market condition. So the sentiment could turn if a news comes around tomorrow saying that BJP might make a government in Karnataka. That might turn, but overall, if you look at, there are other factors as well that are playing. So from the fundamental side, you can look at the crude prices have been increasing, so that is something which can deteriorate, or which can weaken the economic fundamentals of India, because we import a lot of oil. And apart from that, also the weakness in the Indian rupee is something which is also not going down well. So the overall market sentiment also depends on the fact that how the political front will be doing. So an easy BJP win would have also, of course, given an indication that it would be much easier for the NDA government to get majority in 2019 as well. But that is something is kind of not looking as clear as it should have for many investors. So that is something which is kind of making the market a bit uncertain right now. But we have also, what we have seen is that the market has faced pressure from institutional selling. So not the domestic institutions, but the foreign institutions have been selling a lot of stocks of late. And after buying stocks in March, April month has been quite difficult, and even the March month has been difficult. We'll come to that in a bit. So moving on, the market action year to date. So this is how the market looks right now. So Sensex is up 4%, Nifty is up 2.6%. However, you can see how the mid cap and small cap have done. They have tumbled under pressure, and they have done really badly since the beginning of the year. So mid cap is down almost 10%, while small cap is down 13%. Now, if you talk about overhead supply, so overhead supply is the difference between the current index level and its 52-week high. So basically what we try to look at overhead supply is that it shouldn't build up much, because then there's a lot of overhead resistance that an index will face as it tries to move higher. So for key indices, you will again notice that the number is not too high. It is at a very reasonable level. Sensex is down just 2.5% from its all-time high, whereas Nifty is down around 3%. However, on the mid cap and small cap front, those indices have taken a real beating, and mid cap is down almost 13%, whereas small cap is down 18%. So, Xavier, the breakouts that we had shown in the previous slide. So these breakouts are basically, we have a pattern recognition feature in our application, and using that pattern recognition feature, we track the number of stocks that are breaking out of different base patterns, and it could be a cup with handle, a flat base, a consolidation base, and those. Again, we have applied a minimum market cap and average volume criteria, and basically we are just looking at the stocks from our universe, which is around 900 stocks in the Indian market. Right. So again, coming back to overhead supply, so mid cap and small cap indices have taken a real beating, and they are down 13% and 18% respectively. So again, you'll notice that the correction has been more intense in the mid cap and small cap, whereas the frontline indices have held up well. So that was the main fact that I wanted to highlight in today's webinar. And this is a situation where investors will really feel that will really feel confused, and they would not know as to what the market trend is suggesting and what they should be doing right now. And we'll be coming to that point in the later half of this webinar. On the sector front, this is how it has been looking. So the banking, financials, consumption, FMCG stocks, and IT sector, of course, these are the ones that have done really well. And on the other hand, the pharma index continues to remain under pressure, as well as the reality and PSU banking stocks, of course, have been real bad performers. The PSU banking stocks have been affected by the scams that have been brought to notice, and that is something which is played on the investor sentiment, and it's almost down 25% since the beginning of the year. So that's a real bad performance from PSU bank index that is coming. On the good performance side, we have the IT sector that has done really well, and a lot of mid-cap IT companies, in fact, they have been reporting accelerated sales and earnings growth. We also have a couple of them in our model portfolio that have done reasonably well in the current correction that has happened in mid-cap and small-cap stocks. Now, this is something which I was talking about. So, looking at the data yesterday, I was a bit happy seeing that FIIs have kind of come back into buying stocks, and they bought stocks worth 718 crores in yesterday's session. However, this number has kind of overturned, and we saw selling again by the FIIs today. So it was one of kind of a record, as to it was a 20 session streak where the FIIs continued to press the selling button. And so this is something which is kind of playing a dampener on the Indian market right now, because we do not see a lot of demand being coming from the FII side. However, DIIs have been able to hold up the market, and the mutual fund inflows and all that stuff is of course helping the market. DIIs to keep buying stocks, but from the FII side, the demand has been really bad, and that's something, whenever it returns, will of course give some impetus to the market. Now, this is one slide which I had mentioned earlier, that we'll be talking about a couple of interesting facts, and this is one slide which I would like to talk on. So, you can see over here is that whenever the markets have gone down, and the amount of FII selling that has been done has been, kind of the impact on the market has been kind of reducing in recent times. So that is a real positive. So if you look at the amount of money that the FIIs had sold in January 2008 and what impact it had on the Indian market. So it had sold around 29,000 crores, and DIIs could only buy 56% of that, and the market was down 16%. Same thing, a similar thing had happened in October, but now off late, if you see that the DII support has been really good, and because of that, the impact on the market hasn't been that bad. So that is something which is really helping the markets. And even now, when we see the FII selling that happens, so in February there was a lot of amount that was sold. Even then, the market didn't react that badly. Of course, it was down almost 5%, but historically, from historical levels, it wasn't that bad. And even now, when we have seen in April to May, there was a continuous streak of 20 straight selling sessions. Even then, the market have kind of held up well. So that's one silver lining, the reducing impact of FIIs. Now, so coming to the main point as to what should investors be doing right now. So we had a really volatile day today, and the market is struggling for direction. That is something which we can make out from today's action, and it didn't go out as per the overall market expectation, and that's the reason why it was a pretty volatile day. And on the stock performance front, we did not see a lot of stocks that broke out today. There were few of them, I think 2 or 3, but all of them kind of pulled back and closed below their previous resistance level. So we would suggest investors to wait for the dust to settle. We do not know what's going to happen. We cannot predict. Of course, we can predict, but then the success rate of that is something which is not guaranteed. So we wouldn't get into the prediction business. And looking at the markets right now, looking at the weakness in the small cap and mid cap indices, we are a bit cautious right now. And we had kind of added few stocks when the small cap and mid caps were doing really well, and some of those stocks, if you are users of MarketSmith India and premium subscribers of MarketSmith India, you can see that a few of those stocks haven't done that well, and that's mainly because of weakness in mid cap and small cap stocks, and that's the reason why we are a bit cautious right now, and we would in fact wait and see if there is strong action that's happening in leading stocks, the leading stocks as in the ones that are having high EPS, high relative strength, and are those stocks are doing well or not. So we'll wait for that, and in fact, as investors, you should also keep looking out for strong action in leading stocks. Now, if you're thinking about making new purchases in this market, if at all, it should be only restricted to quality stocks. By quality, I mean ones which have exceptional fundamentals and exceptional technical strength. So it could be a stock with a very high EPS and very high RS, and it's kind of breaking out of a fresh base pattern. The reason for that is when the overall market is looking weak, the chances of breakout going higher, chances of a stock going higher after a breakout become slim, and that's the reason why it's always better to wait for the dust to settle and to kind of relook at it when there is strong action in leading stocks and the uh, market sentiment improves. That being said, again, I would like to highlight the frontline indices are yet in an uptrend, and however the mid cap and small cap are looking weak right now. So overall, the stance should be a bit cautious. And if at all you come across a very good stock, you might get into it, but then again, don't go all in and make a small purchase to let the market confirm that you're on the right track. Now, what should you be doing right now if there are not many new purchases to be made right now? I think it's a very good time to build your watch list, to go through your watch list, to screen a lot of stocks, to make sure as to which stocks have great fundamentals, which stocks have really good business models. And since it's an earnings season, there will be a lot of them that are the earnings are still yet to come out. So you can also wait to see how their earnings are coming up, what the management is saying, and all that stuff. But apart from that, once you have shortlisted those stocks, you need to look at them as to whether there are signs of accumulation going on or not. And for that, we do have the accumulation and distribution rating in our app, and you can always make use of that. And I'll also, if I get some time, I'll quickly show as to how you can filter stocks using the accumulation and distribution rating, and prefer stocks that are making sound chart patterns. And for sound chart patterns, in our previous webinar we had covered that, but I'll also give you a quick refresher as to what are the characteristics of a very good base pattern. So going ahead, signs of accumulation. So this is one example of a stock that has done really well, that did really well last year and has done well this year as well. Now, if you look at the areas of massive accumulation those areas have been marked in the chart, and you can see how the stock, when it was going up, the volumes were massive, and it was going up on above average volumes. And while it was kind of moving sideways, or when there was a little bit of correction in the stock, at those occasions the volumes were really low. So that is what you can make out of this, and you can see how the volumes have kind of dried up when the stock was making a base pattern over here. So that is something which you would like to associate with a good quality stock, and these are the characteristics of good quality stocks. Of course, the company will be doing really well on the fundamentals side. It will be doing really well with its business models and reporting really good quarter after quarter earnings and sales growth. However, you also want the stock to move well and in line with its earnings growth, and that's where you can see as to how the demand is building up for the stock. Is there accumulation going on or not? Above average buying is happening or not? And when it goes down or when it moves sideways, the volume should come below average, and there has to be a volume dry up. So these are the signs of accumulation, and you need to make sure whenever you have shortlisted few stocks, and you're looking at its daily and weekly chart, make sure that you pay attention to how the stocks have been, whether it's being accumulated or not. Right. So next up is what are the characteristics of a good chart pattern. So again, this is something which we had talked about in detail in our previous webinar, but I'll give you a brief refresher that will help you in uh, evaluating the stocks that are making fresh base patterns right now. Because what will happen is when we had seen that the mid cap index is down almost 13% from its all-time high, and the small cap index is down 18% from its all-time high. So when such things happen, you'll have many stocks that have corrected 15, 20, 30% also. And these are the ones that will be making new base patterns. And that's when, if you're already aware as to what are the good characteristics of a sound chart pattern, you'll be able to quickly evaluate as to whether your shortlisted stock is making a good chart pattern or not. So there has to be a prior uptrend. We want the stock to come back in favor after a sell-off. It doesn't make sense to get into a stock even when even when it is still going down. So you want it to have, there has to be a little bit of prior uptrend, and that's the reason why this is a primary criteria for all the chart patterns that are displayed on MarketSmith India. There has to be a prior uptrend of at least 30%. You want selling to, you want the distribution to dry up, and you want it to come back in favor. And then once it builds a fresh base pattern, that's when you can evaluate it. The base duration, minimum it should be at least 5 weeks. So that is for flat base pattern. But for other bases like cup with handle, double bottom, the minimum base duration is 7 weeks. The reason behind that is whenever a stock has moved up and then it starts to correct, basically you want when it's correcting, you want the selling to run its course, and you want the stock to move sideways and consolidate for at least 7 weeks, because that's the time when the weak hands, they get bored out and they move out of the stock. So all those weak investors who are impatient and who are not much aware as to what the company is doing and whether they should be holding on there only for making quick bucks, they'll get bored out and they'll move out of it. And only the large money managers, the institutions, they'll be holding on to the stock, and that's what you want. So if you look at this example, you can clearly see how the stock had made a base pattern of, I think this was around 15 weeks, and when it was selling off, you can see it was going on low volumes, and you can see how the down weeks have come on low volume, and there was a period of accumulation inside the base. So this is something which you want to notice with all the watch list or the all shortlisted stocks that you have in your watch list. And there has to be a volume dry up. There has to be some signs of accumulation also. And one more factor that you need to incorporate while evaluating base patterns is what's the base depth. So basically you don't want it to be really wide and loose. Now if you look at this, it should be around 30 to 35%, this base depth, the basically the difference between the high and low of in the base. You don't want it to be more than 50 like more than 40-45%. The main reason behind that is once it comes from its base low and moves up, it has already moved up 40-50%, and then the chances of the breakout, chances of the stock going higher post the breakout is pretty slim. So that's something which you don't want to happen. So it could be really volatile while it's making a 40-45% base depth pattern, and that's something which we need to avoid. Now, I have already talked about volume dry up and accumulation, and there has to be a final shakeout as well. When I talk about shakeout, is many of the traders might want to buy a stock over here when the probability of it going higher is pretty less, and then there will be a final shakeout. In this case, we had a couple of down weeks. Of course, those came on below average volume, and that is something which you ideally want to happen. So there is a final shakeout. All those investors who have made some 10-15% gains over here, they are getting out of it. So again, we have only the serious guys in a stock, and that's what you want. And when there is a fresh demand for that stock again, and that comes on high volume, there's a strong breakout that happens, and you need to pay attention to that. And that is when you need to get into a stock, because it has cleared its previous resistance levels, and it is on a new high. And when a stock is at a new high, almost all investors are sitting on a profit, and that's when it faces least resistance. So that's the psychology behind chart patterns, and these are some of the characteristics that you need to pay attention to when you're evaluating your stocks in watch list that are currently making fresh base patterns. Okay, so a couple of queries in one I'll be answering towards the end of the session. One is about volume dry up. So when I say volume dry up, uh, what I try to mean over here is when the stock is going down. So you can see how the down weeks highlighted here in magenta line have come below average. So this the red line is the average line of the past 10 weeks. What was the volume during the average volume during the past 10 weeks? And if it is coming on below average, that is a positive sign. So the stock is not facing a lot of distribution. It is going down on below average volume. So that's what I meant by volume dry up. And if you notice such things happening when a stock is making a base pattern, it is obviously a good sign. Now, if you haven't guessed which stock is this, this chart is of Edelweiss Financial Services, and from levels of 129, it has already gone up to almost 300 now, and it is again making a consolidation base pattern and is trading very close to its pivot range. It could have broken out today as well. So there have been a couple of sessions where it has been really looking strong, and it could have broken out today as well. However, the overall market turned weak, and that's the reason why the stock couldn't break out of its previous high. So these are the characteristics of a good chart pattern, and this is it for today. And now we'll move on to the Q&A session. And of course, I'm sure you will be having a lot of queries with respect to the market condition, with respect to your portfolio, with respect to your stocks. So this is the time to ask all your queries, and if possible, I'll surely take you through, try to answer all those queries by showing the charts on the MarketSmith India product. Okay, so there is one query regarding Intellect Design Arena. So I'll quickly share the MarketSmith India screen, and it will be good if we can discuss on that. All right, so this is how it looks. I'll quickly pull up the chart for you. So Intellect Design Arena, it's part of our model portfolio, and the stock had broken out. If you can see, this is the daily chart, and the stock had broken out over here after it reported really good results in Q4. And since then, you can see that it has kind of moved sideways, so it hasn't done much. And the main reason for that is the weakness in mid cap and small cap stocks. Even then, it tried to make a new high. It made a new high today. Of course, the volumes on the updates have been good. It is coming above average, and there were a couple of profit booking sessions. So for now we remain optimistic on Intellect Design Arena. The main reason for that is while the mid cap and the small cap indices have been correcting, the stock has kind of stayed sideways, hasn't done that badly, and for now our outlook remains positive. However, considering that both mid cap and small cap indexes are showing weakness, and the small cap is already in a downtrend, you need to make sure that you are having a stop loss rule in place in case if it falls 8% or more below your purchase price. If you look at it right now, it is trading around 15% above its 50-day line. So there's a lot, even if it comes under selling pressure, the next level of support, the next level of major support is at the 50-day line, which is far away. And if in case you notice that the stock is getting weak and it is falling on above average volume and it's breaching your stop loss rule, it's better to come out of it. However, that is something which is just not showing right now. Okay, Samir, yes, you can see the webinar. We'll be uploading the recording on our blog and YouTube channel, so you can go through it later. Okay, next query is on Tata Motors. There are a lot of queries, and it's possible that in the chat box I might miss those queries and it goes on top. So I'll try to answer as many as possible. So I'll take up Tata Motors and Ashok Leyland now. It's a query from Lucky. So let's move to Tata Motors first. So as far as I remember, the stock has been in a downtrend for quite some time. A couple of positive news had also come related to good sales. That is something which had come last month, good sales in the Jaguar and Land Rover space. However, even then the stock did try to move up over here, but then it faced resistance at its 50-day. You can clearly see on the chart how the stock has been failing to take back its 50-day line, and that is a sign of weakness, and we don't want that to happen. So for Tata Motors, I would in fact wait for fundamentals to improve a bit. It is currently in a downtrend. I would wait for the stock to have a prior uptrend. Now, prior uptrend. Now, this is a classic example. If you look at its historical weekly chart, also you can see how the stock had entered into a downtrend in around March 2015, and you can see how it went down more than 50% from 600 levels to 280 levels. And of course, in between, many investors would have loved to get into the stock, maybe somewhere over here and then maybe somewhere over here. But however, that's not how you should be investing. And if a stock is in a downtrend, it's always better for selling to run its course. You can always get back into a stock when it makes a new base pattern. So you can see how it tried to go up, and then there was a prior uptrend, then it again corrected and made a cup with handle, and then once it broke out of that base pattern, there was a good rally which was there in the stock. So something similar is happening right now. A lot of resistance at the 50-day and the 200-day moving averages level. And one thing also you need to keep in mind is when the stock has been going down, so from 600 levels, it came to 550. There are some investors who might have bought here, then it came to 400. There are again investors who bought here. There could be some little bit of averaging down also that was done by existing investors. So when all that happens and they see the stock has gone down to levels of 300, now whenever it comes back to their purchase levels, so if someone had bought at 350 and the investor has seen it gone down to 300 levels, the investor will now want not the least thing that the investor would want is to make a zero loss, correct? And that is a human psychology, and loss aversion bias kicks in. And so when the stock will try to come up from 300 to 350 levels, it will always face resistance from all those people who had bought in at that price levels, and they'll be kind of selling the stock to make sure that their loss is zero in that particular stock. So a lot of overhead resistance is there, a lot of overhead supply is there. So I wouldn't get into the stock right now and wait for the stock for its fundamentals to improve, for its technicals as well to improve, and it to make a new base pattern. Now, with respect to Ashok Leyland, this is one stock that has done really well in the commercial vehicle space. Of course, the company had reported real good growth in terms of sales figures in the monthly sales that it reports for its commercial vehicles. And so there's a pickup in the commercial vehicle industry as well in India, and that's the reason why the stock had given 20-25% returns after it broke out. Now you can see over here there's a light green range, and this signifies the profit booking zone. We have the blue range, which is the idle buy range, and then we have the loss booking range over here. Now all these ranges have been tested, time tested on the basis of historical data. There's an empirical study that has been done as to once a stock breaks out, what is the idle profit booking zone and what is the idle buy zone and what is the level at which we need to cut our losses. Now Ashok Leyland had in fact entered that profit booking zone, and all those investors who had followed the rule and booked profits at 20-25% level, they would be feeling happy right now, because the stock has seen a couple of real down sessions over the past 2 days, and now it is testing its 50-day line. So again, for Ashok Leyland, if the market condition was it was in a confirm uptrend, both mid cap, small cap, as well as the frontline indices, I would have suggested you to get into whenever there is a rebound from a 50-day line. Now that is something which is an alternative buy point. It's not an ideal buy point, it's an alternative buy point. And whenever you see a good quality stock rebounding from its 50-day line, it's a good sign and you might consider entering into it. However, looking at uncertainty which is revolving around in the market, I would stay away from it right now. All right. So next is Tata Global Beverages. And again, Tata Global Beverages had couldn't meet street expectations with its results, and that's the reason why. So there were high expectations from the stock, and it would do well, especially after the turnaround that has been happening in Tata group of companies with the change in management a few years back. And however, that is something which has not happened with Tata Global Beverages. Of course, it has reported good quarters in last two quarters. The earnings growth has been great. However, if you look at it, the stock, the market had some real good expectation from it, and the stock had breached its 50-day line, also its 200-day line. So it is again kind of looking in a downtrend. If you analyze its previous low, now I kind of feel that it could have got support over at the 250 levels. However, in today's session, it breached that level also, and again it might consolidate for some time. Again, this is a third stage base pattern, so third stage, fourth stage base pattern are a bit risky because the stock has seen a good run up and it has not corrected and it has not undercut a low of the previous base. So once a stock after rising, uh, say 60-70%, of course it will come. It will take some time. It will take a breather. So same thing is happening with Tata Global Beverages, and with the results that haven't come well and that have not made market expectations. The stock is in a downtrend right now, and I wouldn't suggest getting into the stock right now. Okay. So there's one query as to why do stocks fall despite beating estimates. Of course, before results, there are many people who might get into a stock thinking that it might give good returns as and when the results come, and for some reason, if they see that the stock, even though it beat estimates, but there is no fresh demand which is happening now. Just seen over here can be related to the fact that there is weakness in mid cap and small cap stocks. We have seen that there is not much of a demand from the FIIs. In fact, there's a distribution that's happening on that side. So where do we get the demand coming from? And if we do not see any demand coming from, there are many positional traders who might want to get out of the stock, and that's when the sign of selling would come in, and others would also close their positions. So such things can happen. In fact, we had seen with KEC International also a similar thing had happened, and even though the company beat estimates both on top line and bottom line front, in fact it was a massive beat, and it came well ahead of street expectation. Even then the stock corrected today, and a little bit of that is much because of the fact that the investors did not kind of like what the future guidance is. So there's a 15% revenue growth that has been given, which is something did not go down well with investors, and that's one of the reasons why the stock came under pressure, apart from the weakness in overall market today. So those things can happen in the market, and it's always better to have selling rules in place, because when you buy a stock and if you see your 20-25% gain becoming 10-15% loss, that is something which will not serve you well in the market. Okay, so right now the number of breakout count is something which is not available in MarketSmith India. That is a feature we might add in future, but we do make sure that on regular basis we are posting it on social media, and of course there are many users who also follow us on social media, and you can always have a look at all those figures on our Twitter, Facebook channels. Okay, next up is Avanti Feeds. Again, it's a bit dicey to evaluate stocks from buying perspective right now, because throughout the webinar I had mentioned as to the small cap and mid cap indices are looking a bit weak right now. If you look at Avanti Feeds, it has breached both its 50-day and 200-day moving averages, and it is trading below that, and it is clearly showing signs of a downtrend. So, and you can see as to the high volume down days that are coming in. So there's a bit of distribution happening over here. So I wouldn't suggest getting into the stock right now. Of course, if you see a very good up session where it is able to take its both 50-day, 200-day moving averages, that might be a trigger for you to get into the stock from an alternative buy point perspective. But looking at the overall market right now and the weakness in the stock, I wouldn't suggest getting into Avanti Feeds right now. Okay, should stocks like KEI Industries and VIP Industries sold before earnings announcement? So that's a really good question, because in fact even William O'Neill has suggested ahead of earnings, and if you're not sitting on a huge profit on a particular stock, and maybe you're making a few loss also on it, you might consider getting out of it, because you never know, if the earnings don't meet expectations, the stock could sell off 5-10%, and that will again aggravate your losses. So you can always get out of it, but then again, on the flip side, if the company is able to report really good results, it could see fresh buying happening. So you need to evaluate it a little bit from technical perspective also, and it also depends as to what is your buying price. Now if you look at KEI Industries, it is kind of seems to have good support at its 50-day line. So just before the results announcement, what I would do is keep a strict stop loss around the 8% level from the pivot price and the 50-day line as well. So from 50-day line, it's still trading 6% above that level. So I'll keep a strict stop loss around the 8% level and make sure that if the stock falls beyond that, I am out of it, because you never know that the earnings might not please investors, and then it might make a fresh base pattern which might have a base depth of 30%, and you could see a stock falling more, 20% more. So it's always better to get out of it before that. All right, so Rain Industries is another example where the company did report good results, but then again, it's a commodity stock, and it had its share of luck when it moved really high last year. But now it's a time when people are, of course, not looking just at the current results. They're also looking at what the future holds for the company, and most of them are looks like most of them are not pleased as to what could happen in future. And these things can happen with commodity stocks, and you need to be careful investing in them, because much before the fundamentals will suggest trouble, the technicals will always show trouble to you much before the fundamentals show that. So it's always better to use your stop loss rules in place of that, and a sell at the 50-day line would have been really ideal, because after a big move from the levels of 100 to 400, in fact 475, you can see how the stock had moved above its 50-day line, and that had served as a very good support level. So there was one down day over here, but it kind of bounced back from there and remained above its 50-day line throughout its uptrend. And now when it breaches it and the volumes are high, you can see that the volume is coming above average over here, and it has breached its 50-day line. It's always better to get out of that stock and give it time, let it build a base pattern. You can always come back into it. By that time, you use your capital in some other stock which is looking really good at that point of time. So the line graph below candles, there are a couple of lines you can see. The red line is the 50-day line. The black line is the 200-day moving average. The blue line is the relative strength line. So this will show you as to how the stock is doing as compared to the index. So whenever you see a relative strength line going up, that is it is outperforming the index. And now you can see it is underperforming the index over the past few days. In fact, for a long time, it has been almost for a month, it has been underperforming the key index like Sensex and Nifty. And over here, this red line denotes the 50-day average volume. Okay, so there's one query on emphasis, so I'll answer that query as well. If in case I have missed any of your query, what you can do is you can repost it, and that will help me in looking at it, because it's possible that I might have missed it and it has gone above the chat box. Right, so in emphasis, what I can see is the stock is doing not badly, it's in fact doing really well. And you can see the relative strength line is going up, it's outperforming the index. Again, from the IT space, some really good numbers have been reported, and you can see that there is an accelerating sales and accelerating earnings growth. So I would continue, if I am holding the stock, I would continue to hold the stock right now, because I do not see much of a technical weakness. It had a really bad down day over here, but what you can see is it didn't go down much. In fact, it was down 0.8%, and the volumes, of course, were high, but the stock is not going down much. So that is something which is not to be worried of. It has a good support at its 50-day line, and I'll continue to hold it right now. All right. So next query is on Mindtree. So again, a good stock from the IT space and has done well in recent times. It was a part of our it is a part of our model portfolio and has given decent returns since it broke out. So you can notice that Mindtree for me is a hold right now because the stock has hit a power from pivot flag. You can notice that over here there's a green flag which suggests that the stock has moved more than 20% in less than 3 weeks after breaking out. So whenever that happens, make sure that you're holding the stock for some time because you're allowing it to prove itself, because this is a sign which most of the big winners have shown in the past. They run up to, more than 20% just after breaking out in less than 3 weeks, and then they tend to go higher. So there's something which you don't want to miss out. Of course, from if you're a conservative investor and if you're happy with a 10-15% profit, you can always get out of the stock and consider it when the dust settles and the market is doing well again and the stock also does well and makes a new high. So you can always get back into it. But from a model portfolio perspective, we are still holding the stock and we continue to hold it. Okay, is fresh entry allowed for Mindtree? Fresh entry for Mindtree would be a little a risky scenario right now, because if you get into Mindtree right now, you can see that there's a little bit of overhead that it has built. So from 1100 levels, it has come down to 1000. So there is around 8-9% of overhead resistance, and even if you look at from the 50 DMA perspective, it is about 13% over that. So it's not an idle buy point, and I think you can still wait, and if the stock builds a new base pattern, you can always get into it at that time. Okay, next is a query from Amit regarding Tech Mahindra. All right, so just to let you know, guys, I'm running out. We are running out of time, and so I won't be able to take a lot of queries right now. Only the ones that I have kind of missed, and will try to answer them quickly. So Tech Mahindra, the chart tells you the story. Strong support at 50-day line. Look at how the stock has, 1, 2, 3, 4, 5, and 6. So 6 times it has kind of found support at its 50-day line, and it has bounced back from there. So this is a sign of a very strong stock, and this is something which you need to pay attention to. So if you're holding the stock, you can consider holding it for some time until and unless it breaches its 50-day line and the volumes are high. So when we talk about estimates, of course, there are many estimates. We have estimates from all the brokers who forecast earnings and sales growth. But then we also have a consensus estimates, and we always believe that it's always better to look at the consensus estimates. And if the company is able to beat those estimates, uh, it's a positive signal. However, if it doesn't meet, it's a negative signal. So the average estimates is a good number to look at. Next query is on Titan. So so this is again an example of a good quality stock that is finding support at its 50-day line. You can notice that there were a couple of profit booking sessions after the company reported its results. Of course, the results were good, and they did meet market expectations. However, there was profit booking over here because you can notice that the stock has done really well over the past year, and it has run up from 300 levels to almost 1000. So we need to make sure that uh, we need to kind of accept the fact that the stock might consolidate a bit, or might face a time correction. However, over here you can see that the stock has broken out into new highs. 1000 level seems to be a strong resistance for it, so it needs to get above that before it resumes its uptrend. But for now, I see good support. It's getting at its 50-day line, and it's rebounding from there, so it's a good sign, and you can continue holding it right now. All right, so if in case I had missed your query, you can always share your queries using our app, using the MarketSmith app, and there's a feature called Ask MarketSmith, so you can you can feed in your query there, and you can send it to us, and we'll be happy to answer that. I'm really sorry, because of lack of time, I'll not be able to answer some of the queries that I have missed. But I really appreciate that you guys found time and joined today's webinar. And it would be great if you can also join our next webinar, which is scheduled on May 29. Once again, thank you very much, and I hope that you liked today's webinar.